Okay, right. What I want to do today is just really, really quickly go through some of the points from last week. I've had some oh, you alright? I've had some submissions from different people, and you pretty much got the main gist of things. You're pretty much there. What you need to make sure is that you are applying it to the scenario, which is what some of you aren't doing. You're getting the concepts. Fixed costs do not change with output, and you're giving me some examples. Variable costs change when more units are produced, i.e. when output changes. Start-up costs are one-off payments at the start of the business, and operating costs are paid throughout the life of the business. You've pretty much got that, it seems. Can you cancel that for me? You've pretty much got the concept. Press the red button. You've pretty much got the concept. What you're not doing, though, is relating it to the scenario. You're not relating it to the scenario. The scenario being WebAct. Okay? Remember, this is on the assignment brief, and I talked through it last week. If you can't get onto the assignment, just summarise this. Summarise this in your own words, just very, very quickly. You don't need to copy it all down. You just need to be aware of who the business is. Because every single assignment you do will not just be theory. It won't just be tell me what fixed costs, variable costs, start-up costs, and operating costs are. It won't just be that. What you'll be doing is given a scenario, and this one, like I say, is WebAct. WebAct is a fledgling company. What I mean by that is a small, entrepreneurial, up-and-coming company. They've just rented out a small retail space, and they are making websites for other companies. So if, for example, John, you've come up with a brilliant new business idea, but you haven't got the ability to build a website, you would phone up WebAct and say, this is my idea, this is my colour scheme, this is my content, build me a website. And then you pay WebAct to do that for you. That is the service that WebAct do. Okay? So when you're giving examples from the different types of costs, you must make sure that the costs are relative to this company. So if I said a fixed cost, the rent remains the same. They still have to rent their retail space. They have to rent the space for their computers, they have to rent the space for their staff. If I said machinery, what would their machinery be?
Computers.
What was that?
Computers.
Computers. It's not a printing press, is it? It's not a production line. Their machinery is computers. Because if they want to build one website, they need a PC. If they want to build 50 websites, they need a PC. So your same definitions of fixed, variable, startup and operating are the same, but must be applied to WebAct. Are you with me so far? Yeah. From the people, some people sent me some work. I had a look through bits of it, and like I say, you've got the gist of it. You've got the gist of it. You must, though, just make sure the examples apply to WebAct.
Because he did have the details on VLE, could get on the VLE.
Yeah, I know, because I thought we'd be able to get the assignment on the VLE. But like you say, now you know roughly, you're going to have some time today to do this anyway, but now you know what the business is, it helps you to apply it. What I want to do today, though, just in this beginning section, is move on to the next part. Because we've looked at costs, we identified in the very first week that it's not just costs that are important for a business, it's revenue and profit. More so, really, isn't it, revenue and profit than costs? So what we're going to look at today are the sources of revenue for a business. Becky, what is revenue? Does anyone have a guess? What would
Income. Income.
Money that's coming
Ooh,
in
it's
and
not
out.
profit. What was that one?
All the money coming in and out. It can't through your business.
You're pretty much there.
The income.
It's the money coming into the business. It's just the money coming in. So it's the money coming into the business through different means. What's the main source of income for a business?
What they're charging people.
Their sales revenue. That's the main source of income. The main source of revenue. You can see there that there are other different types of revenue, but when it comes down to it, the main type of revenue is your sales revenue. How do you work out your total revenue? SP times QS. Remind me, Sam, what does SP stand for?
Sales.
Well, not
Selling
sales.
price.
Selling price.
Selling price times
Quantity sold.
quantity sold, yeah. So for your sales revenue, you need to know, well, how much are you selling it for and how many are you selling? The example I gave with other was a chair or a bin. If you're selling a chair for £5 and you're selling 2, well, your sales revenue is £10. If you're selling 4, your sales revenue is £20. And that's all your sales revenue is.
So what did you say revenue was?
Money coming into the business. Money coming into the business. The main source is through sales, but as you can see, there are other ways. So for example, other revenue or non-operating revenue. Say for example, WebAct have got two big rooms like this they've rented, but they only need to use one. So they decide to sub-rent, the other room. So there's another company, I don't know, Dom's Printing Company, that I need some space and I contact WebAct and I rent the room from them. I give them some money, that's revenue, and all money coming into the business is revenue, but it's not their main source of revenue. It's not revenue from the sale of their product or service, it's revenue they've earned from another means. So it's not through the sales of the website, it's through me renting some space.
What's the government revenue?
How does the government earn money?
Tax.
Exactly what government revenue is.
VAT.
Tax,
VAT.
VAT, what types of tax are there? VAT,
Income.
income tax,
Road tax.
road tax, so? There's inheritance tax, isn't there? Capital gains tax, council tax, stamp duty.
Food tax.
There's unfortunately a tax on quite a few things. Pretty much everything we do is tax, isn't it? What is VAT, on a side note?
You buy some products, okay, a percentage of that price is for VAT.
VAT is a tax on spending, isn't it? It's what's known as an optional tax, an indirect tax, and you don't have to pay VAT, do you? If you don't buy a computer, you don't pay VAT on it. You don't pay VAT on food or drink, or on babies' clothes. They're the only products you don't pay VAT on. Interesting fact. But yeah, so government revenue is just tax. It's the money they make for the taxation of us. Like I said before, I think it was to you guys, when you get your full-time job, you'll be working a week for free every month. Did I tell you that? To you guys, yeah. It's not a very nice thing to work out, but that's the way it goes. That's the way it goes. Interest. If I, as a business, lend Becky £1,000, do you think I'm going to expect £1,000 back?
More.
What am I going to expect back?
Percentage.
More. Because I've given up some money to help you, so therefore I want a reward for that. So if I'm WebAct, the company, I've got some spare cash, someone comes to me and says, I need to borrow £5,000, so okay, that's fine, but if I lend you that for a year, I expect £6,000 back. So at the end of the year, I get £6,000 back. That is £6,000 worth of revenue, £1,000 worth of profit.
You're allowed to do that to
Yeah.
anyone.
Why not? Why not? You can lend money to people. If they're happy to pay the interest you charge. Dividends. We will go into this in more detail in your other units, but dividends are, if for example, if I said shares in companies, would you be happy with that?
Yeah.
Some people would. Would you guys this side be happy with that term?
Instead of what?
If, for example, on the stock market you can buy shares in companies. I could go and buy a share in Apple. It cost me say £15 for a share, and then that may go up to £20 in a year. And if I were to sell that share, I would make that £5. If I was a business, I can still buy shares in other businesses. So as a company, WebAct, I could buy shares in Highbury College. If Highbury College's share price goes up, then I get money. I get my reward for investment, which is known as dividends. That's your reward for saving, so your reward for investing in a company. Final one, royalties. If people want to use my name, if people want to use me to advertise, I get a cut. If you're thinking of a celebrity, if you use their name, then they get paid. If you think of, best way to think about this actually is music. If a song's played on an advert, if a song's played on a film, a TV programme, then the person who wrote that song gets some money. That's not the main reason they made that song. The main reason they made that song is for people to buy it off iTunes or whatever. But it's the extra money they get from the use of it in TV, cinema, film, radio, yeah, what have you. Yeah, radio as well, yeah. So what you've got here are the main sources of revenue for a business. So what I'd like you guys to do, you've got quite a while now, and that is actually P2. Okay, so let's try and get P1 and P2, if we can, done in this session. P1 I think pretty much nearly done, just need to apply to WebAct. P2 is explaining each one of these, and again trying to relate it to WebAct. Okay?
Yeah.
Excellent.